This week, the Bitcoin market felt like a pressure cooker, and all the data is showing that it's just about ready to blow. $114.59 million. That's the amount of peak liquidation leverage that got slammed into the market at a single moment this week. This one number represents an enormous wall of money at risk. It was the absolute point of maximum pain. But you know what? The most dangerous part isn't what already happened. It's what's happening right now. The way the market is structured today is, believe it or not, even more risky, and we're about to show you exactly why. If you find this kind of analysis valuable, drop a like and share. Okay, so first, let's rewind and break down the main event, that $114 million cascade, and how the market completely fell apart. So it all kicked off early on December 18th. You can see it right here on the heat map. See these bands getting brighter and brighter yellow? That's leverage just building up like crazy as the price was trying to push towards $90,000. It's the perfect picture of greed just piling and piling into the system. And then the floor just gave out. The price collapsed, and it acted like a magnet just getting sucked down through those incredibly dense pools of leverage. Every bright yellow band you see the price slicing through, that's a pocket of long positions getting vaporized, which just adds more and more selling pressure to the fire. This is a textbook liquidation cascade. It's a brutal, vicious cycle where selling just creates more selling, and it causes a violent price drop in a matter of minutes. Really understanding this is absolutely crucial if you're navigating these markets. If you want more deep dives on market structure like this, make sure you're subscribed to the YouTube channel. But you know, after every storm, there's always a calm. And what's really fascinating is how the market responded right after all that chaos. And this comparison just illustrates it perfectly. On the left, you've got that peak stress point at 114 million. Now look at the right. Just 2 days later, the peak leverage in the entire system is down to 27 million. Notice the huge change in the scale on the side of the chart and how those thick purple and yellow bands have just thinned out completely. This was a total reset. To put it simply, the market was flushed clean of all that excess risk. Wiping out those over-leveraged positions created a totally clean slate. Now, this is a really critical data point because a low-leverage environment is usually a low-risk one. But as you're about to see, it did not last long. A clean slate in these markets is pretty much just an empty canvas waiting for traders to start painting again. So let's look at how they immediately began rebuilding that wall of leverage. So here's how it played out. The market found a bottom on the 19th, and things went quiet for about a day. Then, as the price started to cautiously climb its way back toward 89,000, you can see leverage just slowly but surely creeping back into the system, getting close to the levels we saw right before the big crash. And by December 22nd, the evidence on the heat map is just undeniable. Look at how those leverage bands are getting brighter and much more concentrated again. That really thick yellow band that's forming just above $90,000, that shows you the market is reloading for another huge move. You should follow us on Twitter for more real-time updates on these charts as they develop. So, this all brings us to right now, to the present moment, and what I can only describe as a perfectly constructed, two-sided trap. This right here is the most important chart of this whole explainer. As you can see on the current heat map, the market is literally trapped between two massive, distinct walls of liquidation leverage. Look at that bright yellow band of short liquidations sitting above the price, and then look at the equally bright band of long liquidations sitting just below it. This sets up a really brutal scenario. Above us, you've got a huge wall of short liquidations right around 89,500. If the price breaks through that, we could see a violent short squeeze to the upside. But below us, there's an equally large pool of longs, all clustered near 86,500. If we break that support, it could trigger another cascade downwards. The market is a coiled spring, and it is wound incredibly tight. This chart really puts it all into perspective. So before the cascade, we had about 47 million in peak leverage. After the flush, it dropped all the way to 27 million. But right now, we are back up to over 71 million, and it's positioned in this extremely dangerous bidirectional trap. Drop a like and share if you find this kind of data valuable. But let's just zoom out for a second, because underneath all of this chaos in the derivatives market, the Bitcoin network itself is telling a surprisingly stable story. This data is just fascinating. Despite all the wild swings, just look at the core network health. Over the week, the price is actually up a little bit. The market cap is stable, and most importantly, the 90-day average hash rate is virtually unchanged. This proves that all that chaos was just a localized derivatives event. It wasn't a fundamental network issue. And so that leaves us with the one critical question as we head into the end of the week. Which wall of liquidity is going to break first? So, what's the key takeaway here? All of the on-chain data is pointing to imminent, extreme volatility. The direction is the only question left to answer. That pressure cooker is about to blow. If you found this breakdown valuable, drop a like and subscribe for more deep dives. You can also follow us on X for real-time updates. Thanks for watching.